Ah, that mid-April tax deadline. You know the feeling. It looms large every year, and let's be real, for millions of us, it's a huge source of stress. Maybe life just got in the way, or maybe you saw the final number you owed and just panicked, thinking, I can't pay that, so what's the point of filing? Well, whatever the reason, if you've missed that deadline, you are in the right place. In this explainer, we're going to cut through all the fear and confusion and give you a clear roadmap. We'll break down exactly what the IRS charges, bust some major myths, and then lay out the exact steps you can take to get right back on track. Okay, let's dive right in with the single most important question you need to understand because honestly, the answer is the foundation for everything else we're going to talk about. What's the bigger financial mistake? Filing your tax return late or paying the tax you owe late? Now, most people just lump these together and assume they're the same problem, but to the IRS, they are worlds apart, and the answer might really surprise you because getting this one thing wrong can literally cost you 10 times more. And this chart right here says it all. I mean, look at this. This huge bar on the left, that's the penalty for failing to file. It's a whopping 5% of your unpaid tax bill for every single month you're late. Now look at that tiny little bar next to it. That's the failure to pay penalty, at only 0.5% a month. So yeah, we're not talking about a small difference here. It's a tenfold difference. Not filing the paperwork is dramatically more expensive than not paying the bill. So let's really break down these costs because when you're late, you're not just dealing with one single charge. The IRS can actually hit you with two completely distinct penalties, plus interest on top of everything. And that combination is what can make a manageable tax bill spiral into a really serious financial problem if you ignore it. So let's look at each piece of this puzzle. Okay, this is the big one, the monster. This is the one you absolutely have to avoid. That 5% per month is just brutal. And get this, here's a little detail that trips up a ton of people. How the IRS defines a month. It is not prorated. If your return is just one single day late into a new month, boom, they charge you for the entire month. It adds up incredibly fast and hits its maximum cap of 25% in just 5 months. Let's make this real. Let's say you owe $3,000 in taxes. After just 1 month of not filing, you've already added a $150 penalty. You wait 3 months, that's an extra $450. By the time 5 short months have passed, you've hit the maximum penalty, $750. That's a 25% surcharge on your original bill, all for not sending in the paperwork. Now, let's look at the other side of the coin. Compared to what we just saw, the failure to pay penalty is, well, it's a lot gentler, just 0.5% per month. It also caps out at 25%, but it takes 50 months. That's over 4 years to get there. But here's a key detail. What if both penalties apply at the same time? Well, the IRS doesn't just stack them on top of each other. The failure to file penalty gets reduced by the failure to pay amount. So you end up with a 4.5% failure to file penalty plus a 0.5% failure to pay penalty for a combined total of, you guessed it, 5% per month. So this brings us to the most crucial point, the single most important action you can take. It's this. Always file your tax return on time, even if you cannot pay a single dollar of what you owe. Think about it this way. Just by mailing or e-filing that paperwork, you're instantly saving yourself from that monster 5% penalty. You'll still have the smaller payment penalty to deal with, sure, but you've just sidestepped the much larger, much more aggressive charge. But wait, the penalties aren't even the whole story. On top of all of them, the IRS charges interest. And this is the part that never, ever stops. You see, unlike the penalties that have a 25% cap, interest has no cap. It will just keep on growing until your entire balance, the original tax, all the penalties, everything is paid in full. And here's the most relentless part. It compounds daily. That means every single day, the IRS calculates new interest not just on your tax, but on the penalties and on yesterday's interest too. It's like a snowball rolling downhill, just getting bigger and faster every single day. And that relentless daily compounding is exactly why that initial $3,000 tax bill doesn't just sit there. Over time, it can quietly creep up to $4,000, $5,000, or even more. It's this creeping cost that makes ignoring the problem the most expensive choice you can possibly make. Okay, now that we understand the costs, let's talk about a common strategy people use to try and avoid them, or at least they think they're avoiding them. And this brings us to one of the biggest and most costly misconceptions in the entire tax world: filing for an extension. This quote says it all, and it comes straight from the IRS. A tax extension gives you more time, usually until October 15th, to get your paperwork together and submit your return. It does not, and I have to repeat this, it does not give you more time to pay the tax you owe. So many people get this wrong. They file for an extension, they breathe this huge sigh of relief thinking they're safe, and then they're totally shocked when a penalty notice shows up in the mail a few months later. This timeline just makes it crystal clear. The payment deadline is April 15th. Period. Full stop. Even with an extension, that 0.5% failure to pay penalty and that daily compounding interest we just talked about, they start ticking away from that original April deadline. So if you file an extension, you must still estimate what you owe and pay as much of it as you possibly can by April 15th to keep those charges down. Oh, and by the way, we've only been talking about federal taxes. Most states have their own income tax with their own deadlines, their own penalties, and their own extension rules. Never, ever assume your state's rules match the federal ones. Okay, we've spent a lot of time on the costs, the penalties, the myths. It's a little scary. Now for the good part, the solutions. The IRS isn't just a collection agency. They actually have several programs in place that can help you reduce or maybe even completely eliminate these penalties. Let's look at your escape hatches. First things first, a huge sigh of relief for a lot of people. If the IRS actually owes you money, if you're due a refund, there is no penalty for filing your return late. Logically, it makes total sense. The penalties are based on unpaid tax, and if you don't have any unpaid tax, there's nothing for the penalty to be calculated on. They're not going to penalize you for being slow to claim your own money. But, and this is a huge but, don't get too comfortable. There is a massive catch. You only have 3 years from the original filing deadline to submit that return and claim your refund. If you wait longer than 3 years, that money is gone for good. The U.S. Treasury just keeps it, and there's absolutely no way to get it back. So please, file that return. That money is rightfully yours, but you do have to claim it. Okay, so that's for folks getting a refund. But what if you do owe money and you've already been hit with penalties? Are you just stuck? Is there a way out? Is there an escape hatch you can use? Well, for millions of taxpayers, the answer is a resounding yes. And this right here is the secret weapon most taxpayers have no idea even exists. It's called first-time abatement, and it's basically a one-time get-out-of-jail-free card from the IRS for penalties. If you generally have a good history of filing and paying on time, they are often willing to forgive your first mistake. It's an administrative waiver that can save you hundreds or even thousands of dollars. And the qualifications for this are surprisingly straightforward. First, as you can see, you have to be fully caught up on filing all your tax returns. No surprise there. Second, and this is the big one, your record for the past 3 years has to be totally clean with no other penalties. And third, you have to have either paid your tax bill in full or set up a formal payment plan with them. If you can check all 3 of those boxes, you can often just call the IRS, state that you meet the criteria, and ask for first-time abatement. Now, there is another path called reasonable cause. If you had a really serious event like a death in the family, a major illness, or a natural disaster that kept you from filing. So let's put it all together. What should you do right now if you're behind and you just can't pay what you owe? It can feel super overwhelming, I get it, but the path forward isn't a mystery. It's a clear 4-step action plan. Let's walk through it together. All right, here is the game plan. Step 1, file the return immediately. Stop that massive failure to file penalty from growing another day. Step 2, pay as much as you can, even if it's just a small amount. Every single dollar you pay reduces the balance that interest and penalties are being calculated on. Step 3, formally set up a payment plan with the IRS. This shows them you're cooperating and it stops more aggressive collection actions like wage garnishments. And finally, step 4, for people in true financial hardship, is to explore something called an offer and compromise. This is a complex program, but it's where you can potentially settle your entire tax debt for just a fraction of what you originally owed. And why is taking action so critical? Because if you don't file, eventually the IRS might just do it for you. It's called a substitute for return, or an SFR. And what they do is they use the income data they have from your employers, but they will give you 0 deductions or credits. Zilch. This almost always results in a much, much higher tax bill, which then gets the maximum penalties and years of interest just piled on top. It is the absolute worst case scenario, and it's completely avoidable by just filing your own accurate return. Now, a quick word on something that really, really worries people: going to jail. And yeah, technically, willful failure to file is a crime. But the reality is, criminal prosecution is incredibly rare for an average taxpayer who just fell behind.
The IRS is focused on civil enforcement, getting you to file and collecting the tax, penalties, and interest. And trust me, those financial consequences are very real and serious enough on their own.
Okay, let's wrap this all up with the most crucial points to remember. 1. Always file on time, even if you owe money you can't pay. It stops that single biggest penalty dead in its tracks. 2. Remember, an extension is just a tool to give you more time for your paperwork, not more time to pay your bill. That payment clock starts ticking in April no matter what. And 3, if you've been penalized but you have a clean record, don't forget to ask about first-time abatement. It's your one-time pass, but you have to be the one to ask for it.